Hello everyone, it is Sterling here from Day Trading Forex Live, and this is now the 7th month-end review of all of our valid trade setups. I started in May, so we're now into November. This is the November review. So that's a total of 7 months, been doing it for 7 months. It was a good idea that a member had back in, I think it was April or May, somewhere around that time, and May was the first month that I did it, and I just kept doing it ever since. What I think is really important to understand, if this is the first time you've seen this video, a lot of times people that just randomly stumble on these videos think it's just me Monday morning quarterbacking saying I would have taken a trade from this level or I would have taken a trade from that level. What they don't understand is that every single, or not every single, but the vast majority, and this is another aspect I'm going to cover here in a second, the vast majority of the trades we take are from pre-selected levels. So what that means is in the members area, every day I do a daily market preview that has a timestamp from YouTube, so I can't go back and just randomly change these numbers because it's covered in the video. But I actually have the levels that I'll be trading from, the valid levels, pre-selected for the next day, and this is done hours before the European session starts. So if you just trade New York, it's done 10 hours in advance. If you trade the European session, it's done 2 or 3 hours in advance. So it's done well in advance of the market actually starting for the day, and that's where these levels come from. They come from pre-selected points that are covered in the daily market preview. Now, it is fair to mention that we will have trades that come from newly created levels. It is possible, based on the strategy, to have newly created levels form during the day. That is completely valid, and that happens every single month. Last month, as you saw, if you went through the month-end recap for October, those newly created levels, if somebody were to have not traded them or traded those levels, it would have made no more than roughly a 1% difference on performance. It was actually 1% down, so you technically would have been doing slightly better not trading from any newly created level. This month, it's going to make a 1.5% difference. Again, a relatively small difference in the overall performance. Now, not only are these levels pre-selected, but it's also a mechanical entry technique. So in other words, when the market comes into these pre-selected levels, the mechanical rules of the entry technique dictate that it's either a valid trade or it's not a valid trade. There is no opinion associated with it. There is no discretion associated with it. And that's an important point to understand, because I can't just say this is a valid trade, because you can go back, look at the rules and say, Sterling, you're not following the rules, or it didn't do this, it didn't do that. And you know for certain whether it is a valid trade or whether it's not a valid trade. You also know for certain whether it was a profitable trade, how much profit, or whether it was a loss and how much of a loss, because again, those rules are mechanical. They are written, they're also in video form, and therefore if I were just to say it was a valid trade, if I were to say it was a profitable trade, and it wasn't, you could go back and say, Sterling, this is not based on the rule set, and it's immediately known that it's not a valid trade. So with the thousands of members of Day Trading Forex Live, I can't just simply go back and say this was a valid trade and it was profitable, because it's pretty easy to call me out if it's not a valid setup. So with that being said, the next point that I want to cover before we get into the video or the actual trades on the month is that we have a software called DTFL Pro. And this is something that I don't really talk about on the front end of the site, because I want people to understand the strategy first. I don't believe in expert advisors. I don't think there's any fully automated EA that just simply works and continues to work over the course of time. Trading is not that easy. It requires some discretion at some level. But what we have done, or what a member did over the course of about a year, spent over 20 grand building a piece of software called DTFL Pro that trades the confirmation entry. So it still requires you to actually input the levels. The good part about that is, again, the levels are selected in that daily market preview each night. So then what is required is to simply take those levels, put it into the program, and then DTFL Pro will automatically trade the confirmation entry setup from the levels that you have input into the program. There is a massive amount of information about DTFL Pro. what I'm going to do, instead of sitting here and talking about that, which is a completely different subject, is I will simply link to the YouTube channel on DTFL Pro, and you can go through all the videos, check it out, and see how it operates, see all the functionality of that system. And again, it's an awesome piece of software, especially for those that don't have the ability to sit there and trade during the day. Now, our strategy is really very, as far as a day trading strategy goes, it requires very little time. Because we trade from pre-selected levels, technically it only requires you looking at the market once every 30 minutes for, you know, roughly a few minutes to see if you're at a level or have a valid setup. But for those that trade the New York session and can't trade London, or those that trade London can't trade New York, software will automatically trade the setup from those pre-selected levels. And you can learn more about it at that link below. If you are not a member, you can't sign up, because again, it requires some knowledge of the strategy. It requires the actual levels that I put in the daily market preview. So we don't sell it to non-members because it's designed specifically for the strategy. So anyways, let's get into the actual trades for the month of November. Sorry for the long intro, but sometimes a little explanation is required, especially if you're going to get the most out of the video. First trade of the month, November 2nd. Okay, so November 2nd, first trade, it was a euro short, and this was our first trade of the month was from a level that was not a pre-selected point. This was not a pre-selected point. Our level was up a little higher. It was at 1087. We had a newly created level form. It satisfied the criteria that we use for a newly created level. It provided a stop run, provided our confirmation back to the downside. So it satisfied the rules of the confirmation entry. Again, DTFL Pro, if somebody wasn't around, would simply trade from that point. Would require you to input the new level, but it would trade from that point. That's why it can be done at the start of the New York session. Let's say you can adjust levels. You can add a new level in if there was a new level created. In this case, trades the confirmation entry short, and we had a valid confirmation from that point. Again, continues down, and that trade resulted in a plus 2% profit. It was actually a little over 2%, but it was about 2.2 or so percent, but I rounded it down to 2% just for even number purposes and to be more conservative there on the final month-end tally. Next trade was again a euro short. It was from 0874, and it was on the 5th. Now this level here, if we go over to our daily market preview, and what I'll do is I'll just drag this up. We'll go up to the 5th, and you can see that our level, we were looking for the third push to the downside that day. Our level was 0874. It was still technically in the process of forming. If you were to watch the video, I would walk you through exactly what is required for that new level to be completely satisfied. It satisfied that criteria exactly, more than enough, and therefore it was a pre-selected point. We came back into it, created the stop run, created the confirmation to the downside based on the mechanical rules of the confirmation entry, and this trade resulted in a slight loss. We never quite hit, or most traders didn't quite hit, the break-even point. Okay, so this was a 25 pip stop. And the reason it was 25 instead of 20 is because we have a rule that when the confirming candle is further than 23 pips away from the high or the low of the stop run, we go to the wider stop. That way we don't have to see as much pullback. And in this case, an entry 20 pips from the high would have been right here at 0871 roughly. And therefore, at this low right here, you might have been up right around the plus 20 mark. And so, you know, this one's right on the edge. I would say it was really about a 50-50 mix of those of you that hit plus 20. A lot of you did move to break even. I'm going to be as absolutely conservative as possible with the final month-end number, and I'm just going to say it was a loss. So the mechanical rule that we would use to exit this trade would be the 8 a.m. close. If you are in a negative trade when you go into a session change, we exit that trade out. Therefore, it would have been roughly an 8% or 8 pip loss. Sorry. So 8 pips, if 25 pips was 2%, because that was our initial stop, so 8 pips down would be about well, 8 pips would be about a 0.8% a 0.8% loss, 8/16/24. Initial stop was 25. So roughly the closest tenth would be a 0.8% loss. And that's what I'm going to count that as. I'm going to count it as a 0.8% loss. And that takes us from 2% up on the month down to 1.2% on the month. We continue over to the 9th. Now the 9th, this was on the pound. And it was a pound long from a backside of a level. So we only trade a backside of a level if there's nothing else that could be stopping the price. So in other words, if there's no other level that is in the area that will be stopping the price. So you can see here 9th of November, and we had a upper level on the pound. I forgot to write the extra 0 in there, but it was 50.80. So again, 50.80. And if we get that back out of the way, there's the level, 50.80. So that trade provided the stop run, provided the confirmation back to the upside. Ultimately, at the close of the confirmation, which was right here, that's where the entry would have been taken. And then at the time of the close, it would have been roughly up around 20 or so pips on an initial 20 pip stop. That is a 2% gain. That takes us from 1.2% on the month, and it takes us up to 3.2% there on the month. Next trade, euro-dollar long. This trade was on the 12th. What we had here was a stop run of the level 0712. That is, again, 0712. So here was our level. Let me just drag the daily market preview over, and you can see here we have daily market preview November 12th, and that level right here, 0712. That was our first lower point to the downside that we have. Never came into the second lower point. So 0712, we provided a stop run with that, confirmation back to the upside, and then the pullback for the entry. This trade was benefited by a speech later in the day. Now I'm going to make a few comments about this trade. Before I do though, that takes us from 3.2% up on the month. That was a full 4% trade. Takes it up to 7.2% on the month. What I am going to say about this trade, and this is just me being honest, if you look at what I wrote in the commentary on this day, actually on the front end of the site, and I'll drag that over right now too. This is actually the free commentary on the front end of the site. What I had wrote on that day, if you scroll all the way to the bottom, one of the things that I do is I write what news we have for the day. Now this was a light news day. It wasn't any news that normally it looks different than this. I actually list the news, the exact deviation, everything else that I'm gonna look to avoid. But anyways, what I wrote was today the only thing that I would pay any attention to are the speeches, and overall I don't think they will be much of a market mover. That was based on the fact that they were not a scheduled monetary policy speech, and they got more attention than I thought they'd get. So if I was in this euro long here and I saw this type of move on that, and I knew we had a Yellen was talking later in the day, would I have closed the trade out? Wouldn't I have? Based on the mechanical rule set, the mechanical rule says you stay in this trade and you don't exit this trade because it's not a scheduled piece of data that is historically capable of spiking the market more than 15 pips. And when I say spike, I mean actual spike. I don't mean moving 15 pips over a 2-minute period. That's not a spike. That's a movement. Technical, mechanical process there. The reason this trade is left in is because what I'm covering in these videos is the mechanical process behind these trades, which makes that officially a valid trade, although it was a benefactor of the Yellen slightly dovish comments at that time. So again, sitting at 7.2%, we continue on to the next trade of the month. The next trade of the month that we had was on the pound. It was a long trade from 51.98. Now this level here was right on the edge, again following the mechanical process, the level that we actually had on the pound here. If we go over to the daily market preview, this is a newly created level. So of the 12 trades we took, 8 were from pre-selected points, 4 were from new levels. Again, didn't make much of a difference at the end of the month. If you just took pre-selected trades only, it would have only made a 1.5% difference. So not a huge difference, but this is one of the trades that would have made a slight difference or contributed to that 1.5% difference. And the level that we had on the pound was 51.77 right here. So this was the first level that we had, 51.77. And if you go back to the chart, with that level 51.77 being down here, the reason that that's important is because I will not choose a newly created level if I have a already existing point within 20 pips. So if this level would have formed within 20 pips of the already existing level, it would not have been a valid new level or a valid trade from a new level, because it wouldn't have been a new level to begin with. So in this case, it was further than 20 pips out. I did not take this trade. I know a lot of you guys did, because again, it was a mechanical, following the mechanical rule set. That is a valid trade setup. Definitely a valid trade setup. I tend to be more conservative, so I'm just being honest saying I didn't take that trade. And that's also why I'm going to be more conservative with the with how I'm keeping track of the month-end performance here. And I'm not going to call that a full 3% trade, because it hit 30 pips of profit. Technically would have been a plus 3% trade. I'm actually going to cut that in half. I'm going to cut it in half again to be as conservative as possible here. And so that takes from 7.2% up on the month. Again, with a 1.5% profit added to that, that takes us to 8.7% there on the month. So we're sitting at 8.7% on the month. We're roughly, you know, getting close to halfway through the month. And then we go over to the next trade, which is on the 18th. It was a euro-dollar long, and it was from 0630. So this was one of those trades that we didn't have a lower level on this day. In fact, I'll show you that daily market preview. You can see here on the euro-dollar, no lower level. The reason being was that we just simply didn't have anything in the area. But what we did form is we did form a new level here. Now, really, this new trade really didn't matter, because this was a break, ended up being a break-even trade, had a beautiful stop run at the new level. If you know how we select levels, this was an absolutely perfect level. Absolutely picturesque stop run. Just unfortunately, we had a scheduled 2 p.m. Yellen speech, and therefore we always exit ahead of those. This trade would have resulted in a break-even stop as it pulled back just prior to the Yellen speech, and therefore break-even trade there from the 0630 level. So that was the third. There's, again, 4 trades from newly selected levels. This was the third of those for the month. And at this point, technically, from the newly created levels, just those trades are up 3.5%. But I'm gonna show you one shortly here that is a 2% loss. That again takes it down to 1.5% if you're talking about newly created levels only. So again, did not make a huge difference on the month. Pound short. This was on the same day. So this was the 7th trade of the month, and it was a pound short from our upper level. Our upper level was 52.40. So to show you this level again, we'll drag over the daily market preview, and here was your pre-selected point on the, again, the 18th. Sorry about that. I think I said 19th. This is on the 18th. One spot 52.40. That was our one and only upper level on the day. So we come into 52.40. We provide the valid stop run. We get the confirmation down, and this trade runs off to the downside, hits a full 4% take profit. Beautiful trade. Nothing complicated about that setup as far as once you learn the setup, picturesque type setup there, and that full 4% take profit takes us from 8.7 pips, or takes us from that 8.7 pips up 8.7%, excuse me, up to 12.7% there on the month total at this point. Now we continue forward. The next short was on the following day. It was a euro-dollar short, and this was from 0751 again on the 19th. 0751 was the level. So that was our pre-selected manipulation point. I'll drag over the daily market preview. You can see our upper level here on the euro, one spot 0751. To reiterate, you can see it in the video too, and YouTube has the timestamp, so you know that there's no way I can go back in and write that level in. Everything pre-selected. 0751, beautiful stop run, beautiful confirmation down, nice trade. Unfortunately, didn't give us a whole lot of profit. This trade got very close to a full 4% take profit, but then came back and resulted in a plus 2% trade, thus taking us from 12.7% up to 14.7% there on the month. And then we also had a short on this day, and it was from 52.88. So this is a pound short, actually. So it was on a different pair, obviously. And the level was 52.88. Now this was a newly created level. If I go to the 19th, and this is such an important point to understand, just because it's a newly created level doesn't mean it's going to be a profitable trade. And that's sometimes what I think people look at. They say, well, you're just picking levels that are profitable trades. No, we have exact criteria that has to be satisfied. And it is either a valid level or it's not. So in this case, we had no upper level to start the day on the pound. We formed a valid new upper point and had an absolutely beautiful stop run of that level that resulted in a full 2% loss, thus taking us from 14.7% back down to 12.7% there on the month. Now that was the 9th trade of the month. We'll go to the 10th trade of the month, and this was on the following day. It was a euro-dollar long. It was on the 20th. And this euro-dollar long was from 0668. This was a London session trade. We came into the stop run point, we confirmed up, and ultimately hit a little over 25 pips of profit before, well, let me just get you the exact number here, from where the entry would have been, which would have been right here at the depth of that pullback, or close to the depth of that pullback. You roughly hit 25, 26 pips in profit, well over our threshold for getting to break even, came back, hit us break even, and therefore the 10th trade of the month resulted in a break even stop, leaving us at 12.7% on the month. Next trade, this was the same day. It was a pound short. Well, let me show you something actually real quick. 0668 was the level, so let me drag this over here. Here you go, 0668. That was our lower level. Next one was on the pound, and it was again a pound short from 52.40. Let me get rid of some of these points here. Excuse me, a pound long from 52.40. So we'll drag this back over again, and you can see lower level, 52.40. That was one of our lower points. Came into 52.40. This is a long candle count. I'm not going to explain candle count. That gets into the rules of the confirmation entry. Not going to explain that, but bottom line is, started way back here, was still a valid trade, provided the confirmation of the upside, resulted in a full 2% loss, taking us from 12.7% up on the month down to 10.7% there on the month. We continue forward to the final trade of the month. It was on the 23rd. So we go over to the 23rd, and we'll drag the daily market preview over. It was from 0643. So on the 23rd, here's 0643. That was our, remember on this day we were looking for the second push to the downside only. That's why I only had upper points. The first upper level was 0643. That was the only level that we came into. So drag this down to 0643. And what we have is a little bit of a unique situation on this trade. When we have a valid setup just prior to the news, remember, we do not carry into any news that is capable of spiking the market more than 15 pips. Sometimes what we do have is we do have a stop run prior to the news, and when the news comes out, we're still within the valid candle count, because we need to be taking the trade within 5 candles from the number 1 candle, and again referring to the confirmation entry. And this candle was the 4th candle, so it was still within the time of the entry, or excuse me, still within the valid entry criteria. And so what we do in that scenario is we allow that news to spike, and we allow that market to stabilize, to again not only stabilize but also to allow spreads to normalize again. So that can take, you know, it can take for some brokers up to a minute or two. Some brokers are faster, some might be a little bit slower. Bottom line is, an entry anywhere on the candle, which is where the valid entry would have been, anywhere in this candle would have resulted in well over 40 pips as the market moved to the downside, hitting well over 40 pips, thus hitting a full 2% take, or excuse me, 4% take profit, taking you up to the 14.7% mark on the month total. Again, we were sitting at 10.7, taking you up to 14.7% total there on the month. Now, November is a short month. That's why the last trade was here on the 23rd. Also, we went into a holiday market from that point forward for the remainder of that week. And then at the start of the next week, didn't really have a whole lot of activity that produced anything valid. as I always say, when you worry about, for those that are worried about trade quantity, that want to see more trades, master the setup first. If you can master the setup and you can trade it profitably for a 2-month period of time, then and only then should you really worry about moving into increasing quantity. Because if you don't have quality taken care of first and you increase quantity, well, then all you're doing is you're increasing the quantity of the poor trades that you're taking. If you're taking poor trades that are not valid setups, if you're trying to follow the DTFL entry criteria, and you increase quantity and you're not taking the right trades, then you're increasing poor quality trades, the number of poor quality trades. So concentrate on quality first, guys. This really goes to the article that I produced. If you didn't see it, it's right now, it's depending on when you're watching this, probably if you're not watching this soon, it's probably not going to be on the front end of the site. But where you'll find it is you'll find it under the articles tab. So I'll just show you that here. This is the articles tab. All I did was, if you're on the front of the site, you just click on articles here. The very first one that's up there right now, again, whenever you're watching this, could be on the next page by the time you're watching this, but if you're watching this anytime soon, it'll be here on the main page, and it says 3 keys to becoming a profitable trader. What I cover is how that consistent, steady growth will grow an account. So what I did is I actually took the month-end results that we had. So what it covers is it covers that 6-month period in May. May 20%, June 12%, July 31%, August 9%, September 6%, and then October 15.1%. That averaged a 15.5% growth on a monthly basis. Now this month being a 14.7%, or November being 14.7%, that pretty much gives us a pretty consistent growth that would lower that percentage just slightly. It'll probably lower it down to roughly 15.3 or something like that, 15.2. But what I then did is I took that 15.5% average monthly account growth, and I showed you what that does over the course of a 30-month period. So starting with a $5,000 account value, you can see the growth using that 15.5% number over the course of a 30-month period. Now, I think anybody would be happy with that starting balance growing into that number over the course of a 30-month period. Now, this doesn't account for the fact that you'll reduce risk as your account grows. You're not going to use a 2% risk with a 6-figure account. You're just not going to do it. So to grow an account at that rate, obviously there's some limitations that you have associated with that. There's mental limitations. There's just the logical limitations that go along with that. You don't have liquidity limitations in the Forex market, so that's really not an issue. But more than likely, you'd reduce risk slightly. I'm just showing you pure number basis or a pure number account growth based off that average growth. So what that should really do is it should hopefully kind of ground you to stick to a very basic setup, because so many times people look at it and they say, well, God, I got to have more trades, or, I got to risk more per trade. What this shows is that what most people would call is very few trades in a month. It shows what it's capable of if consistently applied over the course of time. And then also, again, if the amount of trades isn't what you want, once you understand the strategy, taking on other pairs is the way to increase the amount of trades that you're getting. And you could easily double the amount of trades that you're taking by taking on 2, 3, maybe 4 additional pairs if you desire to do so. Also, if you're not hitting all the trades on a monthly basis, the way that we fix that problem is with DTFL Pro. If you're not able to trade London, let's say you trade just New York because you're based in New York, DTFL Pro allows you to hit the London session trades because it is automatically trading those setups for you, allowing you to catch those setups that you wouldn't be able to catch if you were actually, or wouldn't allow you to catch because you're not sitting there watching the market at that time. So anyways, guys, hope this video helped. Hope you enjoyed the November month end recap. If you didn't watch the prior 6 months, a lot of really good information in those trades, or in those videos, excuse me, covering those trades. And you can find those videos by going to daytradingforexlive.com and clicking on the recent trades tab of the site. I'll put a link below that if you're watching this on YouTube to the recent trades section of the site, so you can simply go right there. If you are watching the video on YouTube, please remember to subscribe to the channel. You'll get any new videos that we put out, as well as like the video if you found it useful, and comment below with any questions, comments, or concerns, and I will personally get back to you on that. If you are watching the video on the Day Trading Forex Live site, I always appreciate those that are sharing the videos, liking them, +1, or tweeting them out. Appreciate that, and we'll keep putting these videos out for you. All right, that's going to do it for me with this one. I will see you all back for the next video. Until then, happy trading.